Welcome everyone to Vested Interest. I'm Shane. In today's video, we will be covering my most recent additions to the portfolio for the week. And if you're new to the channel, just to catch you up, on this channel we cover dividend growth investing. More specifically, we will cover the creation, monitoring, and updates to my dividend growth portfolio. This portfolio is focused on dividend growth stocks, and the goal is to one day live off the portfolio's passive income provided by the dividends and utilize the income stream to make other investments, real estate purchases, that sort of thing. And at a minimum, I will be adding to the portfolio on a bi-weekly basis on or around each pay period. If at any time you find the content interesting or of value, please hit the like button, thumbs up button, consider subscribing to the channel. And if you know anyone who might find the content valuable, go ahead and share the content. Don't forget to hit the notification bell so you can be notified when I add new videos. I welcome all questions and ideas for future topics or constructive criticism in the comment section below, but please keep the comments respectful and in line with YouTube posting guidelines. Guys, we're in some volatile times. Markets up and down here. Quite a few different positions are pulling back. So I've spoken about it before. During these times, it's the best time to look at your portfolio, see what you have the highest conviction about, see what's pulled back, what you want to add to, and then dollar cost average into those positions. I wouldn't recommend YOLOing. You only live once. Throw it all into one stock and hope it shoots up to the moon. That's just not realistic investing, a realistic investing strategy. I know over the past few years, even the last 8 or 9 years, that may have worked. You could almost throw a dart at the wall and hit any stock you wanted to, throw some money into it and get some gains. But that's under different market conditions, with the Fed looking like they're going to raise rates. Not looking like it, with the Fed going to raise rates. We're going to get back to a more normal market, so to speak. And the QE will go away. All the stimulus checks will go away. So people aren't going to have a lot of that extra income thrown into the market to do that YOLO style investing that's been going on. So guys, with that said, I hope your portfolios are doing well, but let's take a look at what I jumped into this week. So here, as you can see, we actually started putting money into the putting money to work in the portfolio on Tuesday, the 25th. We had a little bit of extra cash sitting in the bank account, so I rolled 500. Actually, I think I rolled about 600, but of that 600, I put $590.36 to work. And with that $590, I purchased 10 shares of Enterprise Product Partners, ticker EPD. Enterprise Product Partners is a energy distributor. They distribute oil and natural gas, and I picked that up for $23.96 per share. I also picked up 2 more shares of Sibanye-Stillwater. That is a mining company. SBSW is the ticker. And then I saw Huntington Bank shares has pulled back a little bit, so I picked up 21 shares of Huntington Bank shares, ticker HBAN, and that is out of the financial sector. We went back to the portfolio. Quite a few areas had pulled back on the 27th. So we put another $1,242.13 to work. And with those funds, we bought 3 more shares of AT&T. I really wasn't planning on adding to AT&T. I had run it up to about 100 shares, but again, it was below my cost basis of, I think, $24.70 or $24.60, somewhere in there. So I picked up 3 shares for $24.24. Actually, I think I had a little bit left over after these other shares. It usually does what I purchased first. Intel would have been the first purchase this day. AT&T would have been the last. But AT&T is in the communication sector, and it's ticker T. Picked up 6 shares of Kraft Heinz Company. I think my video, when I talked about what I was going to be picking up, Kraft Heinz, you'll see Leggett & Platt, Store Capital, 3M, Intel, all on that list of stocks I was watching that had pulled back that I wanted to add to. So again, 6 shares of Kraft Heinz, ticker KHC. That's in the consumer staples sector. Picked those up for $36.85 per share. Picked up 6 shares of Leggett & Platt, ticker LEG. That's in the consumer discretionary sector. We picked those up for $38.74 per share. We added to the REIT Store Capital, ticker STOR, 10 shares at $30.86 per share. We added one more share of 3M Company, ticker MMM. We've been adding this one pretty regularly. Almost every time that we make a purchase, we're adding to 3M. I usually add to Johnson & Johnson as well. I did not add to Johnson & Johnson this round, so we'll look probably to add to J&J if they remain in the 170 or lower range, which is where they're at right now. But we picked up that one share of 3M for $171.69. I actually think it's down to 168 or 169 now. 3M is, so we will look to continue to add to that position. And then we added 4 shares of Intel Corporation, ticker INTC, another one that had pulled back from around the $52 range where my cost basis was to $48.27 per share. And 3M is in, if I didn't mention it, is an industrial sector, and Intel is in the technology sector. And then again, these would be in reverse order. I picked up Verizon first, so I think I had a little bit left over, and picked up 1 share of Lumen Technologies, ticker LUMN, for $12.13 per share, also the communication sector. We picked up 6 more shares of Huntington Bank, and I think these were actually, I think we picked them up for $15.30 per share up above. They're $15.17 per share here, ticker HBAN. Huntington Bank shares is in the financial sector. We picked up 2 shares of Main Street Capital, ticker MAIN, for $42.90 per share. And Main is actually an investment company, right? They give loans out to medium-sized businesses. They have a really nice yield. If you haven't looked at Main, that may be one to take a look at as they've pulled back. And I will be putting out a video also coming up with some companies that I'm looking at for February, and hint, Main probably will be on that list. Verizon Communications, 4 shares, ticker VZ, and the 4 shares were $52.88 per share. Verizon's one that's been pretty much beaten down here over the last year that I've been steadily adding to. We're getting close to 100 shares of Verizon as well. And those were the 3 days. So on the 25th, the 27th, and the 28th, we added to the portfolio. And then a quick overall portfolio update. The total value of the portfolio currently sits at $77,318.75. The dividend yield has crept up to 4.436, and that is, we have been focusing on higher yielding dividend stocks. HBAN is over 4%. Couple others there, Main Street Capital that we just showed was up around 6%. So we are focused on some of these higher yielding companies. As they pull back, we're adding to those positions. And then, as always, guys, the most important part, the annual dividend income is up to $3,429.85. Whether the market's up, down, or sideways, that is what we want. We want those dividend returns, that passive income in the form of dividends, to pay us continually regardless of what the market is doing. We will continue to receive those dividends, and this number will continue to grow as we add to our position, and the companies themselves increase their dividend payouts over time. Quick run through the sector weights. Communications, we're at 9.9%. Consumer discretionary, 2.53%. Consumer staples at 12.36%. Energy at 11.9%, financials 8.78%, healthcare is at 13.02%, industrials 10.68%, technology 7.68%, materials is at 6.49%, utilities at 6.45%, and REITs and real estate is at 11.03%. And guys, the reason I like to run through this is I believe it's very important to be diversified in times of volatility like this, like we're currently in. The market's currently going through a great volatility. A lot of people rotating out of high multiple stocks like the tech sector and into other sectors. So when that happens, as certain areas drop, other areas do better. So if you're diversified across your portfolio, it will limit that volatility a little bit. and help you to maintain gains in some areas, even if you have losses in others. And then what I do is when I have those losses in areas, those are where I look to buy. And as the other areas run up a little bit out of fair value, I don't really add as much to those positions. I may add every now and again right before their ex-dividend date just to make sure I'm giving them some attention and increasing the shares and the dividend payouts. But there always should be a point, and you should have a point, where you say, okay, this stock is overpriced and I don't want to throw my capital into it, because if you're well diversified, you should have positions that are offering value to you. And guys, that's it for this video. Stay tuned. Like I said, I'm going to be putting out another video here over the next couple of days, probably on Monday morning right before the market opens, to cover some stocks I'm going to be watching for February. Again, January was a pretty volatile month. I appreciate you stopping by. Again, if you found any value in the video, I'd appreciate it if you hit the like button, thumbs up button, share the content with anyone you think might find value in it. Give me a comment, drop a comment below. Let me know what you think about my purchases this week. Let me know what you picked up this week, what you saw value in, or what pulled back in your portfolio significantly that presented value. And as always, excuse me, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time, guys. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.